Welcome everybody to the Chinchilla Pickin' Podcast. It is April the 28th, 2024 at 4:07 p.m. My name is David Underwood. I'm joined by Brandon Beaver. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. Brandon, how are you, man?
I'm good. I just woke up from a nap, just trying to get my bearings about me, wake up here so that I can be, responsive and alert for the show.
I almost thought you said you're about to get your bears about you, you know,
No.
Miss Mr. Perma Bear over there. You're not a Perma Bear, but I could just call you that lately. I just call you that lately.
Investing, I'm a perma bull. So
Well, yeah,
once I buy something that's a good value, I tend to hold on to it for a long time.
right. Best way to do it. Um, yeah, no, not much going on. As far as non-stock investment news to really go on about. So I just want to talk about a win you had. I want to give you credit, applaud you, so everyone knows you broke your unicorn curse. You got Tesla right.
Yes. Yes.
How does that feel? That monkey is off your back now. You
Well,
got Tesla right.
well, I haven't sold it. So paper gains, yes, I've gotten it right.
Nice, nice. Yeah, I mean, you made that call last week. I was happy to hear it because I'm holding Tesla, and I was down at that time. I haven't checked the price lately, so I was happy to see it move last week, positive for me. I do know Elon Musk is in China, or he was in China, and trying to get see how their autonomous vehicle driving is working over there to see also if they can pump that software that they're charging for
Yeah.
to make it a taxi. If they could get that started over there in China, and that was actually promising. So that's actually more good news that's going to come out on Monday.
Well, he had a meeting with the Indian Prime Minister that he postponed because of he wanted to kind of go head first into Tesla and try to solve the issues they were having.
Yeah,
So I wonder if
right.
he's rescheduled that.
Who knows? Maybe, maybe. All I do know is there was a lot of earnings. There was a lot of news. I know. If you don't know, I'll just get into the rules. Rules. Brandon and I get together 5 to 10 minutes before the show, and we tell each other what we're going to talk about. You're here to lie back and forth, the bicker and the banter, right here on the show for you. We got together before, about a minute before, and we have the same thing.
Yeah,
So
we
I
really
guess
talked
that
on
means
that about it.
right. We're gonna be I don't know if we both agree on everything, but we've covered the same topic, so it should be a very good conversation, and hopefully we have come to the same conclusions. But if not, it may make it even more fun for everybody, right?
Yeah, right.
So as always, Brandon, I'll let you lead the way, even though you're not really going first because we had the same thing. But I'll let you lead the discussion. How about that?
Yeah, that'll work. All right. So let me get to the beginning of my notes here. I've got a lot of notes. Alphabet's quarterly profit jumped, and it was by more than half. They are going to have their first cash dividend, and the stock went higher, obviously. And it was kind of even Stevens for me. And this is kind of how the market's been working for like the past 3 to 6 months. When one stock goes up for me, another one goes down, or when one goes down, another goes up. And I seem to not even notice it on my whole portfolio. But uh, I wonder if if this is what it's like to be diversified, because I'm not. But I feel like my portfolio is acting for some reason like it is. But revenue in the first 3 months through March rose 15%. That was year over year. $80.5 billion is what it's clocked in at. That's a 13.5% rise from the previous quarter. They brought in $12 billion of capital expenditures. I'm sorry, I shouldn't say they brought in because they're spending the money, but they pushed out $12 billion of capital expenditures, a 91% increase from the same period last year. And this is kind of going to be a theme as we go through the rest of the podcast here, because we saw sort of the same thing from Microsoft and Meta. Much lower capital expenditures from Meta, but they got punished greater. But we could talk about the rationale behind that as well in a minute. Microsoft dropped $14 billion in CapEx and equipment acquired under finance leases in the latest quarter. That was more than the company used to spend in an entire year just 5 years ago. $6.72 billion of this were for AI. Go ahead, Dave.
So hold up. Now, do you think it jumped not just because of the earnings revenue top line number beat, but of the dividend was also, you know, a cause usually for stocks to go up, but the $70 billion in stock shares that they're going to buy back, which when you only bring in 80 billion for the quarter, and then you say over the course of a year you're going to buy $70 billion worth of your own stock, I think you need to find better what uses of money. But a stock, you know, maybe 20 billion in stock buyback and invest 50 billion in something, but you know, I think the stock buyback had a little bit to do with it.
Yeah, I think so too. But I do think that they are trying to find better ways. The AI thing still hasn't completely played out, so we don't know, you know, exactly how much money, and I don't even know if they've projected how much money this thing's going to be worth as far as artificial intelligence goes. Any of these three companies, they're kind of vague as far as how much money they think they're going to make. So I don't know if they even know. I just think they see it as a very big opportunity, and they're in a race right now to be the winner. Um, I
I mean,
think
you got to be
Alphabet,
first in today's world, right?
yeah, I think the reason why Alphabet was rewarded for earnings was because ad spend surprised. So the money that they were bringing in on the ads that they sell, that surprised, and I think also Alphabet. When you look at Alphabet, I think they were up, you know, maybe somewhere around 10-11% year to date. Microsoft was close to about the same thing, both beating out the Nasdaq, but Meta was like 39% year to date. So I think a lot of Meta had to do with profit taking. Also, Meta guided for, I think it was revenue at the end of the year, was about 12% off. So a 12% drop on Meta actually makes a little bit more sense when you think about it in percentage terms, and you know, the guidance, so to speak.
Gotcha. Which I find unusual for Meta because it's a presidential year. You're gonna have all kinds of ads everywhere, all over Facebook. Every time you get on that or Instagram, they're gonna push all kinds of algorithms out. It's just gonna be a hot mess on social media. Definitely as we get closer to November, you know. So you would think they'd be making great money this year.
Well, Meta did have a record quarter, so I'll get into that here in a second. But it was a pretty actually pretty good report for Meta. But like I said, I think there was a lot of profit taking as well. Uh, for Google, ad sales in the first quarter rose 13% from a year earlier to $61.7 billion. Sales in the cloud division rose nearly 29%, and they attribute that to artificial intelligence and the growth in the cloud area on that as well. So we're starting to see a little bit of money being made by artificial intelligence. They did have additional layoffs. Their core engineering division, they've completely restructured. That affected about 200 employees. Employees are going to be able to apply for open roles across Google, so at least that's good news for some of them. Some of their email addresses at the end of the day will still work, so that's a good thing. The CEO did say on Thursday that the company is encouraged by an increase in search using its new AI tools. Otherwise, they were still a little bit murky about what they believe artificial intelligence's impact will be on their bottom line. Meta CEO Mark Zuckerberg said that he doesn't expect AI services to be profitable for them for years. So, once again, using a very blanket term, years, doesn't say 4 years, 5 years, 10 years. He just says years.
And
So,
I think that's more of an honest approach. And I'm not saying Google or Microsoft are dishonest. They haven't come out and said when they expect it to be profitable. I think Meta is just letting people giving a honest guidance saying, hey, it's going to be years before we see the profits from this, but
right.
we see immense profits from this. We just have to do the investment to build up the infrastructure and all that first to get to that point.
Right, right. I was surprised too, by the way, to see one of the top 5 advertisers in spending last year, and they mentioned this specifically in the Wall Street Journal. The ad business was greatly benefited by a company called Temu, and that's one of their top 5 advertisers, Chinese e-commerce company.
I got to get you out of your house more often, man. So, yeah, and there's a whole thing of how to pronounce Temu correctly. Um, you've got there was a Super Bowl ad that caused a lot of controversy, but everybody, this has been a thing going on. For a while, and it has grown. It's like the Etsy, but of Asia.
Okay, I've heard of it. I've heard of it. I don't care for Etsy. I don't care for Etsy because everything that's on it's fake. So I like to buy a lot of like old sports collectibles, antiques, and things like that, and cards. And people get on Etsy and they make these old sports cards to look real, but it's just stuff that somebody just recently printed off at their house, and I don't care for that. I really don't like it.
Yeah,
I For wrestling fans and baseball fans, you know that Macho Man Randy Savage played AAA ball for the Cincinnati Reds, right? And I think he may have went pro for like a year. And somebody on Etsy made a Macho Man Randy Savage rookie baseball card that got me really excited for about an hour because I thought it was real. Thankfully, I didn't bid on it because I figured out that it was what's called a custom card that was made on Etsy.
yeah, they got to read the fine print on a lot of that stuff. It's like just today I was going through some of my old stuff and I found this old dollar bill from back in the day with a low serial number, everything. And I started Googling it. It said it's worth $30,000 or $20,000. But I finished my research, it was only worth like 900.
Uh,
So yeah,
yeah,
that first, so they always hit you with that first initial, this is what this really is. No, no, it's
yeah,
not.
yeah. Um, YouTube, advertising growth on YouTube surged 21%. They brought in $8.1 billion in sales, ad sales. Authorized, as you mentioned, $70 billion in new stock buybacks. This is the same amount they did last year. Um, with that being said, so pretty good quarter there for both Microsoft and for Google. I think it was really good for Meta too. Meta's total
Just want
revenue.
to, can I
Huh?
make one point before we move into Meta or anything else? That Microsoft and Google took market share as far as the cloud services, and they took it away from Amazon.
Yeah.
Amazon AWS lost market share of cloud services to Google and Microsoft. And I think that's important because I don't hear a lot about Amazon's AI as much as I do as of Microsoft and Google, and I don't know if that has something to do with it or if they just change their price structures, and that's why they're gaining market share over Amazon.
Well, there's another company that's benefiting from that, and that's Meta, because Meta, instead of utilizing their AI services to go into the cloud arena, instead of competing with Google and Microsoft and Amazon, what they're doing is they're partnering with Microsoft. So they're making apps based on artificial intelligence from Microsoft's 365 software and for their cloud. So I thought that was kind of interesting to find out too, as well.
That is interesting. That I did not know that, by the way, that Meta is partnering with Microsoft there in the cloud with the Office suite for cloud services and AI. But that's a smart way to go about it.
Yep. Meta's total revenue for the first quarter was 36.46 billion. That was a 27% year-over-year increase. Growth was fueled by the company's strategic focus on artificial and intelligence-driven initiatives. Meta's net income surged to 12.37 billion. That was a remarkable 117% increase in net income for the same period in 2023. Earnings per share up 114% from the previous year. You are going crazy about that fly you have in your house. Dave's got a fly in his house that was let in that is just an absolute menace.
So
Just-
yeah, I have never had flies in my house, right? Or ever, right? My daughter moves back in from college, which is great. I love having her here. But one day back, 24 hours, and I got a fly in the house, and I'm sitting here trying to swat it as Brandon's talking because I can mute my microphone.
Well, you know, one of these days I'm going to put together all the outtakes involving your cat and this fly.
Yeah, I'm sure that yeah, she went crazy last week. That was fun.
All right. 114% increase in EPS, 117% increase in net income. Still, the stock sagged. I think it's a buying opportunity personally. I mean, it's not like back the truck up and buy it here. It's not like huge, value, but fairly valued at this point. You can add it to your portfolio if you don't have it in it already. I think personally, that's my opinion. Ad impressions delivered across Meta's family of apps increased 20% year over year. Average price per ad rose by 6% year over year. And then the biggest thing here, people were looking at guidance, which was off just by a little bit compared to what they've already done. Meta investing $6.72 billion in capital expenditures, almost equal to what was it? I think it was Google that I was talking about. It was either Google or Microsoft, one of them, but almost equal here, but Meta getting punished again.
Well,
Rather
what are they spending their money on? Because that's where it's critical. Because Google is investing in AI, Microsoft investing in AI. The problem that Meta has, yes, they're investing in AI, but they also continue to invest in VR and the metaverse, and a lot of people don't believe in that.
Yeah, so artificial intelligence investments, I've got that coming up for all of the companies actually, and what their strategic initiatives are. One thing from Meta is going to surprise you and every listener that has not been to Meta's investors page. I'm going to promise you that. Um, as of March 31st, 2024, Meta held $58.12 billion in cash. That's interesting to me. And one of the things that have developed over the past couple of weeks here, as we've gotten more news from the Federal Reserve, they're probably not going to cut rates. Stagflation has become an issue here.
Whoa, don't steal my thunder from later on. I said we're going to cover that afterwards, after
Yeah,
we cover
but no,
the
but I
big
want to I
three.
want to talk about like what people are trying to do to still profit off of these cash heavy tech companies instead of
Okay.
buying the stock. A lot of people are going into bonds on them. That's it because it's safe, right? I mean, like they're cash cows. So you're gonna buy a bond from Meta. It's gonna be a low interest rate on the bond,
A
but you know
corporate
you're gonna
bond.
get.
What's the interest rate on a Meta corporate bond?
I don't know. I don't. I have no idea. I just.
How's it a cash cow? I don't,
So theoretically, because $58.12 billion in cash and cash equivalents and marketable securities, Apple is like $100 billion, probably more by now. I mean they've got tons of cash sitting on the sidelines. These bonds are not going to go under. They're not going to be junk bonds, so to speak. Theoretically, the interest rate should be lower. If I'm wrong about that, chastise me on the next show, but I really doubt they're high. Um, the company's head count was 62 or 69,329. I could be wrong on that because I've got an extra comma on it. We'll just say they had a 10% year over year decrease in headcount. How about that?
and we all knew that. We saw that come in. They announced it ahead of time. That was all right.
Yeah. Microsoft's profit rose last quarter. Artificial intelligence bolstered demand for its software, cloud services. It prompted the company to spend billions on infrastructure needed to accommodate the booming appetite for the hot technology. Really, really hot for them in cloud. Google Cloud, the world's third largest cloud computing company, generated $9.57 billion in revenue. This impressive figure, that's a 28% increase from the company's previous year of 7.45 billion. Google CEO, he's saying that this growth is due to benefits in Google's artificial intelligence that they provide for company or for their customers in the cloud industry. So we're starting to see some revenue, a little bit of profitability for some of these companies. Here's what they're really focusing on as far as Google, Microsoft, and Meta goes. I'll start with Meta here. first of all, they've got to make a video. That's an AI system that generates videos from text. They have the no language left behind translation. That's self-explanatory here. So translating even low use languages all across the world. But the one thing that surprised me, and this is called the ESM Metagenomic Atlas. This is providing the first view of the dark matter of the protein universe. Now, Meta AI has created the first database that reveals the structures of metagenomic world at the scale of hundreds of millions of proteins. These proteins, which are found in microbes in the soil, deep in the ocean, and even inside our bodies, vastly outnumber those that make up animal and plant life. But they are the least understood proteins on Earth. Now, what decoding the metagenomic structures will help us do, they say, in solving these long-standing mysteries of evolutionary history, they will help us discover proteins that may help cure diseases, clean up the environment, and produce cleaner energy.
Nice.
Surprised a little bit by that because they've already shared their findings with, I think it was 600 different peer-reviewed journals, different medical establishments and scientists and stuff like that. So there's a lot going on there, I think, that a lot of people probably didn't know about. And as
Yeah,
I
it's go ahead.
No, you're fine. Go ahead.
It's not common knowledge. Yeah. And am I did I know about the protein investment and research? No. Am I surprised? No, not at all. I mean, Amazon has full years ago started delving into the medical field and research field. Microsoft's been heavy in this field in researching agriculture and farm. Bill Gates owns thousands of acres of farms and so on and so forth. There is a lot of initiatives and interest from these CEOs and their companies in these areas outside of their main profit sector, and you kind of see this when a company or a CEO founder of a company gets to a certain level, they start delving into these other areas of trying to help society.
Yeah. It's that so it's going to be interesting to see what develops from that. Now, Google's AI research, their focuses revolve around the following. So, merging Google Brain and DeepMind. Alphabet merged two of its AI focused groups, Google Brain, which was part of the research division, and DeepMind. DeepMind, which Google acquired in 2014, that's been working on futuristic projects like teaching computer systems to beat top ranked players and the Chinese board game Go. They combine their talent into one focused team by combining these two areas of their research. Backed by Google's computational resources, Alphabet aims to accelerate progress in AI, improved user experiences with AI. They're using AI and machine learning technologies to offer users more personalized and relevant experience across existing products, including search, YouTube, and others. Improved user experiences, helping keeping users engaged and coming back for more services. They've been at the forefront of AI research and development. Some notable moves, they've included Google Brain in 2010 for advanced AI research, hiring top AI researchers like Jeff Hinton, Yoshua Bengio, and Yin LeCun, incorporating AI products across search, maps, photos, Gmail, and more, and Google Cloud. So a little bit more basic stuff there from Google. They've had some controversies involving Gemini. They've had to postpone a little bit of their generative image creation because it was producing I don't know. They said it was like, what was it, false information or something like that. But it
So
seems like they're starting to get that back on track.
yeah, so this was a problem that was brought about before all this AI talk was when you create AI, you can program it to think a certain way and at first, and then it's eventually going to learn on its own. And so they went in they tried to do a new spin on the initial programming, and it went just complete backwards on them. So that if you search certain things, it didn't even get close to it. And then they couldn't tell the difference between an apple and an orange. And there were so many other things going wrong with it that and it was because they were trying to be preemptive in
Yeah.
fixing what they called disparaging parts.
Right. Now, for Microsoft, a lot of their AI research has involved their Office client, Microsoft 365, in increasing productivity and improved work quality, faster task completion for customers. And that's been rather successful. They have had some weaknesses in AI generating emails and doing PowerPoint graphs and things like that, but that I think is on the horizon at least. Um, they've rethunk kind of the cloud infrastructure by optimizing across hardware and software layers. Innovations that have included new AI optimized silicon chips like Azure Maya for AI workloads and Azure Cobalt for general purpose tasks. Azure Boost also enhances storage and networking performance. So that's kind of the three different things. I'm more excited about Meta's AI research, to be honest with you.
Of course you are.
Yeah,
Tell us why, Brandon. Tell
well,
us why you're impartial and not biased because you own that stock and not the other two. Go
actually,
ahead.
actually, I've owned Google for a while too.
Okay.
Yeah.
I just want the listeners to know full disclaimer, Brandon owns a good chunk of Meta in his port. He's overweight Meta. How about that?
Yeah. Well, that metagenomic, um, that research in the metagenomic field is, I don't know, that just really excited me when I saw it. I thought that was pretty cool.
It
And
is. I mean, yeah, it is cool. I'm glad they're doing that.
who knows if anything's going to come of it? But I mean, the possibilities are.
Right. It could be a waste of money and nothing ever happens, but it also could be something there.
Yeah, and that's actually interesting because nobody ever actually thinks that that happens in the private economics field where you really don't know if you're going to make any money off of it, but if you do find something that is for the benefit of humanity, you will, but it's a risk and that's why a lot of people think that like capitalism and stuff is bad for science, but then you have Meta doing stuff like this. I think it's
I
gonna
mean, here's the thing. When people say, about so I'm a capitalist. I'll just be honest there. I try not to get political on the show, but I am a capitalist. And they they talk about like how bad it is. I mean, look what Carnegie left the world, man. You have so many
right.
public libraries that are only around because of his fund his endowment he left to fund those.
Yeah.
Public parks, so on and so forth. I mean, you can start listing off,
Yeah. Look at his work in the anti-war field too.
right?
But yeah.
Nobel Prize. Who the guy who invented dynamite created a Nobel Prize?
Yeah.
Come on. So there you go.
Yeah.
Are you buying any of these three at these prices they're at?
No. I already own two of them at really, really good prices. So I'm not putting any more money into them right now. I don't need to. I'm already way overweight on Meta. And
Yeah.
honestly, I mean, part of the reason why I think that it was a lot of profit taking is because I was tempted to do it myself. Not after earnings, not after the drop, but prior to earnings, I'm like, wow, I've become way overweight on this because it's had such an incredible run. I might just take some profits off. I didn't, but
Yeah. So here's the thing, and if we talk about profit taking, this is a good segue here to stop talking about individual stocks and talk about when is it good time to take some profits, right? So I look at it like this: if you own a company and it's now grown and grown and grown. Now it's overweight in your portfolio. That a large part of your portfolio is made up of this because the company's grown so much. That's great. So should you take profit just to rebalance your portfolio? Not if you still believe 100% confidently that
yeah,
that company's going to continue growing. I say you hold. I say you
right,
don't just. I don't believe in selling just a rebalance. Some people actually do. I know investors who believe fully in the amount that like if one part of your portfolio just grows, you need to take some profits to rebalance your portfolio. And I'm like, why? If you still believe in the value of that company at its current level, then just keep holding, because you're going to make even more money with that than you would
Right.
if you tried to rebalance. I understand the reasoning of rebalancing is so that if that company has a bad quarter and drops all of a sudden, now your whole portfolio is dropping. Uh, uh, not I'm losing track of the word. Disproportionately, because of the one stock you own, the one
Yeah.
company you own, and so it's throwing off your portfolio. So I understand the reasoning behind rebalancing, but if I believe firmly in the company, I'm not gonna just take profits to rebalance. I'm gonna hold. Now, if I believe that the company's hit the mark where I thought it would hit, and that I see slower growth going forward, then I would rebalance my portfolio. I would still own that company. I would just take some profit off and rebalance it and put in other areas.
Right.
That's when I would do that.
Yeah. Yeah. So that your portfolio is not correlated entirely to one stock.
Yeah.
Yeah.
And so there's times when you rebalance and times when you don't rebalance. As far as Meta, if you're holding Meta, I say just continue holding, man. You don't need to rebalance your portfolio at this moment in time,
Right.
in my opinion. It's just my opinion, one guy's opinion, but I would say just keep holding because it's going to continue higher.
Real quick, let's use Tesla as an example. I think that there was profit taking at the very beginning. I think some of it was rational. I think some people were looking at a 5 to 10 year chart, a bar chart of earnings per share, and they started to see slowing growth on the earnings per share line, and something that looks like at least a short term to medium term peak for earnings. And some people took some money off the table. And maybe some of those were whales and it triggered a panic. And so what winds up happening, like it did in the case of Tesla, is the selling got overdone by quite a bit, right? Because it was rational profit taking at the very beginning, and then it turned into panic selling, which is something you should never do. And it drove the stock way too low, which set up a good opportunity to buy in before earnings. I don't know if I actually called this stock a buy on the show last week prior. I don't know if I did.
You
I know
did.
okay, good, because I knew I did it in our group chat. I knew I said I was dipping into it before earnings in our group chat, but I didn't know if I said it.
Oh, maybe that's what I'm thinking of too. I just know you got it right.
Yeah, finally.
Yeah. So yeah, a lot here. As far as Google goes, I would say if you're not already bought in, I would not buy in right now. There's a lot of puts on here. I was on StockTwits looking for some, good funny things or anything useful, and a lot of people have puts on Google, or at least claiming they have puts on Google that they bought in on Friday after the big jump up because they believe that it went overbought. So I would wait this week, see what happens. And also with the broader economic news that we're going to get into here in a couple minutes, as far as the economy and where it's at. So if you haven't bought in yet, I wouldn't buy in at 175. I would wait and see what happens. Microsoft, I think you're safe right now wherever it's at. I don't even know where it's at. 420, 425, 415, who knows? Somewhere around there. Sure. It's the world's largest company. They own so much that if you start looking at what they're doing, it's just so innovative and ahead of its time. And they had the biggest cloud share of the whole of the world of cloud business, I believe. I could be wrong. There might be a company in China that probably does bigger. But as far as what I'm aware of, they have the biggest cloud business share. So I mean, it's a strong company.
Yeah, 100%.
Cool, man. What else do you have on these three companies or the tech? And they're moving the markets right now. These three are.
That's all I've got.
Okay. Cool. So let's move into take a couple minutes here and let's see if I have any interest in StockTwits. I tried to look everywhere and I could not find anything. I was on because the crypto guys always give me something funny usually. But one on the Ripple StockTwits, it said, "We made the Forbes good for nothing blockchain list again." That's something to be proud of. There you go. On the Shiba Inu one, this one actually I liked. It's not really funny, but I liked it. It said, "Scared money don't make money. Hold."
Okay.
I like it. It wasn't really funny, but it's It was funny. But also on the same Shiba Inu, it says lower lows and lower highs. Welcome to Sunday. Yeah, these guys yeah, man, I don't even know. On the Tesla one, this was on the Tesla stock twits. Why are there so many bears on Sunday? Bears don't go to church or what? Anyways, some funny ones. If you don't know stock twits, it's a good time to get on there. Brandon runs the Chinchilla Pick and stock twits, but
I've got some really good ones for myself. Let me read
okay.
some of my one. People don't say, people always say to me, Brandon, why don't you talk about yourself on the show more often? That's what they do. They always say you're too modest.
You are too modest. I have to brag about you and say you do all this research and you're so intellectually smart and analytical. You're the Al Michaels to my who's the other guy?
John Madden.
John Madden. I'm John Madden. You're Al Michaels. You just buy low and then it's so high. All right, go ahead.
All right. So the best investors and CEOs are not thinking in the present. Their minds are on where they want to be in the future and what headwinds and tailwinds are years away, sometimes decades away.
Oh, nice. Nice.
All right. Let's see. Dave says I have to post on here more often, so thank him.
I think I remember that one.
This was October of 2022, and you would have been good to take heed and listen to this one because you would have been up 239%. I said, "Dear everybody, Meta is not Snap. Thanks."
Nice.
Because on that day,
Nice.
Snapchat had terrible earnings, everything tanked. Meta included on that. So,
well, I like that one, and I wish I would have been take heed in at that time. Actually wasn't even following you on stock twits at that time. Now I do though. I'm patiently waiting the next one, and I'm patiently waiting for Monk to check in on our Discord. So Monk, please check in.
you still have a Discord?
I don't even know. It pops up on my phone every now and then. I went on there like once every 3-4 months, and I don't see anybody in there but like this person named Monk who goes in to make fun of us every so often.
Yeah.
Okay. Are you ready?
Yeah, go ahead.
We're going to talk about something that I reported last week, and then CNBC tried to copy me. So CNBC came out with this article today at 4:37 a.m. And the article reads, the WEF president, we haven't seen this kind of debt since the Napoleonic Wars. So they go on to quote the Borge Brende, president of the World Economic Forum, talking about a meeting he was at that you heard it first. Chinchilla Picken reported on last week when when I was quoting all the different people that were talking about U.S. policy and where U.S. is and the debt problem, right?
Mm-hmm.
So this person goes on and says the global growth estimate this year is around 3.2%. It's not bad, but it's not where we used to be. The trend for growth used to be 4% for decades. Adding that there was a risk of slowdown like that seen in the 1970s in some major economies. He goes on to talk more about trade and different situations. He goes, and one of the next quotes there is a good quote. Trade will change in global value chains, but there will be some more near shoring and friend shoring. But we shouldn't lose the baby with the bathwater. I have no idea what this guy's talking about at this point. And then he follows that statement with, then we have to address the global debt situation. We haven't seen this kind of debt since the Napoleonic Wars. We're getting close to 100% of the global GDP in debt. That's a scary thought if you're looking at it from his point of view, right?
Right.
It's currently at 93% of GDP of debt last year, right? They estimate we're gonna hit 100% by the end of the decade if we don't stop and turn things around soon. There's so much unpredictability, can easily get out of control. If Israel and Iran escalate that conflict, we could see oil at a price of 150 overnight, and that, of course, would be very damaging for the global economy. So I'm bringing this all up because this week we had the first quarter GDP numbers come out and first quarter inflation numbers come out. This is the numbers for the quarter, not just 1 month, right? And the GDP number came out at 1.6% growth of GDP, which is it's growth, but it's not good growth. And then the inflation number was at 3.6%, so still not at the 2%. You can make an argument that 3% inflation is okay and doable. You can make that argument. I've heard that argument made before. However, it's 3.6. The Fed has said they want 2. They're not getting near 2. It just edged up by 0.1%. So it's going in the opposite direction. That coupled with the GDP number coming at 1.6%, it makes you very worried, right? So, Brandon, thoughts on this first before I get to my quote from 2 years ago?
Well, the growth there at 4% was largely in response to the end of the Cold War, when many countries turned their back on the idea of communism, came out, freed up their economy, liberalized their markets, and grew very, very quickly. More specifically, China. And then Japan was on the rise in the 70s and 80s as well. South Korea, they called it the Asian dragon, right? So China's got a very large percentage of the world's population, and a lot of the global growth was driven by them. So who's going to be next to drive the global growth? I don't know. We're not coming from nothing like what we were coming from. A lot of these countries were very, very, very poor as a result of communism. And when they liberalized their economies, opened them up more, and became at least more of a mixed kind of communist bag, so to speak, if that's what you want to call China, that really accelerated growth very quickly across the globe. I wouldn't be surprised if we start to see that come out of South America. I don't know.
I know you like Argentina right now still.
Yeah, I do like Argentina right now. And we came very far, very fast, even as a country in the United States. I mean, don't throw the baby out with the bathwater, Dave. 100 years ago, 150 years ago, when people didn't have running water, what they would do is they would take the water from the well, put it in a bath. Everybody in the family would bath in the same water. And by the time you would get to the baby, which was last, the water would be such a deep brown color, you could lose the baby in the brown water that they were bathing in. Hence, don't throw the baby out with the bathwater. We wouldn't think of that today because we've come so far.
Thank you for explaining that to me.
Yeah, you're welcome. You learn a lot listening to this show. So, yeah, not just about stocks all the time, is it? But anyways, here's the thing. I don't know what's going to happen as far as growth goes. We were driven very, very, very far by China for a very long time, but you can only grow so much.
Right? All right.
Before you start
well, this brings up my point. 2 years ago, I reported on the infrastructure bill that was passed on the show, and we talked about its effect on bonds and interest rates and different things like that. And in order to get the bill passed, Janet Yellen, she was Treasury Secretary at that time, she came out and she said, all we have to do to pay for this bill is stay above 5% GDP for the next, I believe it was 5 to 10 years. Because at that time, we're at 5.4% GDP growth, right?
Okay,
because we were coming out of COVID. We were coming out of COVID. Yeah. So we had above 5% GDP growth. She said we just need to stay above. That was a quote from her. And it was quoted across all the media at that time. That's how they would pay for this bill. Well, GDP has never been above 5% ever since she made that quote.
It dropped above 5.
It dropped and it hasn't gone up since, and it's now at 1.6% growth. What they were hoping when they passed that bill was that the money would go in, it would spur the economy, more people would buy, there'd be more money to tax, right? You would get more tax money coming in because people are spending and the economy's bubbling. And the problem is it didn't work that way. And so when I see 1.6% GDP growth right now, and I see inflation's going higher, not down, I don't see the Fed making any rate cuts this year. Now, I did 1 month ago. Now I don't see it. If the Fed is making good, conscious decisions for the better of the economy, like they're meant to, they should not make any rate cuts.
1.6%. That's anemic.
Yeah, I mean, it makes me wonder that if this economy goes, if oil goes higher and the economy slows down anymore, we don't go negative this year for one of our quarters.
Yeah, 2.
Yeah,
If we go 2, Dave, you're taking me to Sizzler.
I will take you to Sizzler if we can find one. If they go 2, I will fly us to the only Sizzler left. If we go 2 quarters in a row,
or find me a Ryan Steakhouse. I was always good with one of those too.
Right. So, I mean, it's like here I'm concerned now. So I was the perma bull, and now I'm coming out publicly saying now I'm starting to get concerned when I see these numbers. I've been waiting for data to show me something, and the data is showing me something. We dropped to 1.6% GDP with all the other bearish news I've heard in earnings. People guiding lower for the rest of the year, but we heard this last year and it didn't happen. Are we going to see it this year? I don't know.
No, you saw Jerome Powell on 60 Minutes ringing the alarm bell saying, hey, the debt is growing faster than the economy is right now. That's a problem.
Yeah, well, I showed I talked about how everybody was saying about the U.S. economy last week, and now they're saying global debt's too much. So the debt is a big problem, but I mean, you have to cut spending in order to bring in debt, and I don't think any part of the U.S. government's interested in cutting spending.
No, I don't think so either.
Neither party. I say neither party. No part of the U.S. government right now that I'm aware of is interested in doing that. So,
boy, that's crazy. So essentially, 93% of the money that people have in the world is owed to somebody else.
Right. Once we hit 100%, can we all just turn around and say, I forgive you?
Yeah, right.
Your debts are forgiven.
Yeah.
Done.
Yeah.
If
we all walk away from the debt that we owe, then can we get mad at each other for it? I don't think so.
Right. Yeah, exactly.
That's the kind of stuff that can cause wars on a global scale.
So, I mean, and this is the problem. That's the problem I see. You couple that with geopolitical events. Now, okay, for the first time in a year and a half, I'm saying, I'm a little concerned now.
Yeah.
Have I fully joined your group, Brandon? No. But am I tiptoeing across to your side and my side back and forth right now? Yeah. I'm on the border. So there you go.
Water's getting warmer in here, Dave, and I haven't peed in it yet, so it's
I better join now, right? And Tristan, there you go, because he kept asking me, when are you ever going to say that the data's there? And I'm like, the data's not there. So there you go, Tristan. I came out and said it.
Yeah.
All right, Brandon, final thoughts, man. What do you got for us?
I mean, I'm still going to hold through it. We go through a recession unless I lose my job and house payments start getting behind on those things. I'm not selling my stocks. If you want to say the word perma bull, perma bear, whatever, I do expect a recession. Clearly, it could get really, really bad. I don't know, but I also expect us to come out on the other end of it, just like we always do.
There you go. All right, my final thoughts is, since Bitcoin we haven't seen the movement we thought we're going to see, but that's typical. That is typical. And anytime a big event happens, Brandon's already getting back, crossing his arms, crossing his legs, getting ready to disagree with me here. I see it on video. Anytime that some major event has happened and we expect Bitcoin to jump up, it doesn't. And the big whales are waiting for the retail investors to sell out, and because they can't hold. A lot of retail investor crypto people have very paper hands, meaning they sell at a drop of a hat. So they're waiting for them to fully sell out so they could buy in very, very cheaply in it. I do believe that's going to go up. I made the comment that it's going to go up by the end of the year. You're going to make a profit on it. So I'm still investing in that and not getting out. I recently sold my cooler, and I've talked about getting back in. with my profits I made on Cooler, I have gone back in with 20% of the money that I had in there before. I bought back into Cooler at the price it's at. So I'm in a much lower cost basis market with this company now and a better position overall. But then I am looking for opportunities, but with the run up recently in the big FANG stocks, I'm kind of on the sidelines because I don't see any mid cap stocks that I'm really looking at. Oil's not moving where it's at. ExxonMobil is working on a deal with Turkey to provide them with natural gas because Turkey's looking for more than one provider. They currently only have one provider for the whole country, and they would like to have more than one after seeing what happened in Europe with the Ukraine-Russian war and the natural gas there, and what happened in Egypt when Israel had to stop pumping natural gas to Egypt. So they would like to have more than one option. So they signed in a deal with ExxonMobil. That should provide a bump to ExxonMobil, which I also hold. That's one of my holdings is ExxonMobil. And I should see a nice little 1 to 2% jump there. Other than that, I don't really have any final thoughts. Then look for opportunities. Don't always follow a big jump up. So Google just had a big jump up. You know, you don't want to buy in after it gapped up whenever there's a big jump from one move to another, unless you firmly believe in the microeconomics, the fundamentals of that company at the price it's at. So the jumped up price.
Right.
Then go ahead. But if you believed it at 150, not 175, then you might want to wait. But if you believe it at 175, even after it jumped up 25, then go ahead and get in. That's my only thoughts on that. Brandon, rebuttal response.
Long term, I think Tesla is still okay where it's at right now. You might have better opportunities in the coming weeks with a little bit of give back on it, but I still think the economics are there and the opportunities are there for Tesla to go much higher.
There you go, man. All right. As always, we hope we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.